Is Bitcoin preparing to enter a major high time frame downtrend, or will the bulls reclaim control? These are the questions we're answering in immense detail today. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are doing a macro analysis for Bitcoin, discussing the recent correction, whether or not Bitcoin is moving towards a new high time frame downtrend or even a potential bear market, as well as going over the short term and the altcoin market. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. Our VIP channel does nearly have 700 members. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, trading chat, and education chat, news, daily video, help, and trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more info. Let's go ahead, guys, and jump on in. So as we can see, Bitcoin has seen an extended short-term correction sub $60,000. We have now reached the $58,000 region, continuing to break toward the downside. Bitcoin is still showing an immense amount of selling pressure, but it is still within the confines of the broader descending channel formation. In today's video, the entire purpose of today's video is to discuss two things. Number one, at what point does the macro uptrend for Bitcoin officially end based on our technical data, and at what point does a new bear market potentially start? And these are topics we're going to be going into pretty big detail on the monthly charts, on the daily charts, on the 3-day charts, but we're also going to be taking a look at the altcoin market as well as Bitcoin dominance, as there's some pretty critical signs on these charts we need to discuss as well. So starting on that market data, 24-hour volume is creeping up 12% at 150 billion, and 24-hour liquidations are insane, with 344 million, with 291 million coming from longs and 55 million coming from shorts. The single largest liquidation being 27 million. If you are the person who lost $27 million today watching this, well, that sucks. I've got nothing really to say. That's an insane liquidation for one single order. So massive volatility, some massive amount of liquidations going on. Moving over to the DXY, looking at the DXY over here, we can see the DXY did correct down to 103. Temporarily finding some support around this region. If we are going to see a bounce for the DXY, it is likely to occur from this 103 region. Of course, with looming threats of a recession and the Federal Reserve now being a little bit uncertain about what they're going to do with interest rates, which is quite comical because at the end of last year, they said we're going to see 3 rate cuts at the start of the year. We got to the start of the year, then they pushed the rate cuts to the mid of the year. Then they said we're going to see 2 rate cuts by mid-year. Then we're going to see 1 rate cut this year, and now it might not even see a rate cut this year. And again, they've been leading the market on. They've been toying with everyone's emotions. They've been toying with expectations, and with a governing body like the Federal Reserve that's supposed to be transparent and supposed to provide, up-to-date and relevant information and avoid market manipulation, they've done pretty much exactly the opposite of which their responsibilities lay. In reality, they haven't been transparent. They've been pushing manipulation, they've been misleading the public, and it's quite sad to see how the government really have, developed over the last couple of years, particularly the Federal Reserve. They really are not working for the people anymore. They are working against retail, and if what we have seen this year is not evidence enough of that, you really haven't been paying much attention. So moving over, guys, from the DXY, looking at the S&P 500, the S&P 500 is also in quite a hairy situation. We're not looking terrible here, but we're on the brink of it, right? We're on the edge of a knife. And if the S&P 500 loses that 5,300 level, That is going to be the first prior high since the breakout of the downtrend. So the break of the downtrend right over here, the first prior high, this being our high point over here, this being our high point over here. We had a local high here, we had a local high here. If you notice on every single correction, we never drop below those prior high points. You can see we never drop below these prior high points. If we break below 5,300, this will be the first time since January 2023, the start of the uptrend, that we have actually seen some major structural weakness in this trend, which could indicate the initiation of a macro downtrend. So the S&P 500 is literally sitting on a knife's edge. If we do not bounce from here, if we do not bounce this week, it is very likely we see extended corrections, something to be cautious and aware of. Until then, support is support until it is not, and the possibility for a bounce is still on the table. Let's go ahead, guys, and jump into our analysis today. A quick word from today's video sponsors. If you want 15% off your trading fees for life and up to $5,000 in bonus rewards, sign up to the links down below. I'll quickly play an ad and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump back into it. And we talked about briefly at the start of the video, the possibility to enter a high time frame downtrend and even a potential macro bear market. And we also discussed just moments ago how the S&P 500 is really on the brink of entering a new high time frame downtrend. So we're going to do the same for Bitcoin. And the way we're going to look at this, we're going to look at it from two perspectives. We're going to look at it from a high time frame downtrend perspective. And what that technically means is that Bitcoin will invalidate the structural and technical levels that are indicating Bitcoin is still in an uptrend, and then we'll look at it from a bear market perspective, which means if we enter a bear market, we're going to see multiple months of continued downward price action, which will result in breakdowns of lower levels of critical support. So a high time frame downtrend could take us down just to one more level of high time frame support, with a bear market could break through those high time frame support levels. So if we look at this chart over here, we can see this is our Ichimoku cloud. We have been in a technical uptrend for Bitcoin ever since we broke out of this diagonal downtrend. This diagonal downtrend represented the downtrend of the prior bear market, right? This is our bear market downtrend. We saw a break of this downtrend around early Jan. This is like early to late Jan. At the same time, the S&P 500 saw that breakout over here. We saw that respective breakout for Bitcoin, and we saw a break above the Ichimoku cloud leading span B, the leading span B being the upper red line. Okay, we flipped it and it became the lower red line. The leading span B breakout indicated a major macro trend reversal from a downtrend into what we have been now in a uptrend. We have been in an uptrend for Bitcoin for, we're looking at over a year. We're looking at about a year and a half. And since around March this year, we have been more or less in a sideways consolidation. We'll talk about this in just a moment. But from a trend-based perspective, Bitcoin is very much and has been in a macro uptrend. If we take a look at the leading span B, historically the leading span B, when broken, we can look at it over here, for example, we can look at it over here, for example, we can see another instance over here. And if we go back all the way in history, every single time Bitcoin breaks below that leading span B, whether it be a major break or a small break, we generally see high time frame corrections for Bitcoin. We can go back all the way in history. We can see another instance over here, another instance over here. Every single time we break below the leading span B, Bitcoin sees a high time frame correction, which either results in the initiation of a bear market or just a high time frame correction to a near level of high time frame support. Historically, that has meant a correction of 15 to 71%, and this has had a 100% hit rate, meaning every time we break the leading span B, we see a pretty major directional move in the direction of which the leading span B was broken. So if we were to see a breakdown of the leading span B, not only would we see the inverse of what we saw over here, which marked the reversal into a uptrend, meaning we would see the inverse of that, meaning a reversal into a downtrend, we are likely also going to see that downtrend continue at least to our next high time frame area of support, where in this instance, our next high time frame support is around 47 to 49,000. So if we were to see that leading span B breakdown, we are very likely to see an extended correction to 47 to 49,000. 47 to 49,000 is actually a very important level, and we'll come back and discuss that in just a moment when we move to the weekly chart, and more importantly, when we move to the short-term chart. So this information is very applicable and very important for Bitcoin, not for altcoins, but for Bitcoin, because while we remain above the leading span, we are still in a consolidation and we are still in a uptrend. So, this is very, very different for altcoins. Now, if we take a look at altcoins have been getting absolutely decimated ever since we reached the top over here for Bitcoin, the local top at 70,000, and we have been pushing sideways. And the reason altcoins have been getting absolutely decimated is if we look at when Bitcoin entered this horizontal consolidation at around about March 2024, and we look at Bitcoin dominance from that March point, well, Bitcoin dominance has moved up around 4%, while Bitcoin has moved sideways, and the total market cap, the total market cap has moved down around $600 billion. What does that mean? It not only means that Bitcoin and altcoins have been dropping, but a lot of that money has been moving back into Bitcoin, rotating away from altcoins, really exacerbating the correction for the altcoin market. So all is well for Bitcoin. We're not really too worried about Bitcoin at these levels because we're in an uptrend, but altcoins are not in the same position. They are looking absolutely horrible, and in fact, they have been looking horrible for a long time. So when we're talking about the high time frame uptrend, we are specifically talking about Bitcoin, not the altcoin market. Let's talk about that $47,000 to $49,000 level, and we're going to go ahead and discuss that from a weekly perspective first, and then jump into the short term. And this is where we want to talk about the bear market level too. What we can see over here is our Gaussian channel on the weekly. And if we go ahead and take that upper band of the Gaussian channel and just extend it along a little bit and just make this a green line, it does at some point converge. You can see over here, it converges with that $47,000 to $49,000 region. Now, if we look historically at bear market initiation points, generally when we're looking at the prior tops, right over here and right over here, what we notice is that when we break into the Gaussian channel from the top side down below the upper band, we generally see an extended continuation through the Gaussian channel. So we can mark that breakthrough as the initiation point of the bear market. And we say bear market again because the correction results in breakdowns of numerous high time frame levels of support, which would result in, again, an inevitable break of that 47 to 49K region. We can see back in 2017, we broke into the Gaussian channel. Again, the Gaussian channel is quite a lagging indicator, but we still saw an extended, we're looking at around a 65-75% correction after that point towards that absolute bottom. Again, the point at which we break into the Gaussian channel marked the flipping point from a high time frame downtrend into a bear market downtrend. So that is what we're looking for over here. So we look at this particular instance, what we can see is that Gaussian channel level actually coincides very well with this $49,000 to $47,000 support region. So what does that mean? It means if we were to see a break of the 3-day, the 3-day leading span B, if we sort of break down, that would mean we enter a high time frame downtrend. But from technical definition, we would not enter a high time frame downtrend, a bear market for Bitcoin unless the 47 to 49K region was broken. So from here, from 56K downward to 47 to 49k, that is high time frame downtrend. Below 47 to 49, that is a bear market. So if Bitcoin were to enter a new bear market, we would need to see 47 to 49k broken. If we were to see 56k broken, we are very likely to see a high time frame correction towards this support to retest that weekly Gaussian channel. That is what we're looking for in the high time frame, and that is the distinction of those 2 points. It's very important to understand the difference between a bear market and a high time frame downtrend and when those levels actually trigger. Moving over to this chart, this is going to be our daily chart. Very important chart over here I want you to pay massive attention to. If we take a look at that level, we talked about 47,000, okay, we'll go ahead and mark it out. 47,000, okay, to 49,000 is going to be this region right here. It is going to be from our buy side or our buy side liquidity, which eventually broke. We had a change of character and an extended continuation, and that local high point. This is going to be that major level of support where we would see a correction to if we were to break below the descending channel downtrend. Remember, while we are in a descending channel formation, the expected directional continuation is still upwards. We still expect that continuation upwards, provided the trigger points at 56k, which is the leading span B, is able to sustain. If we break down here, we will likely invalidate the descending channel, enter a high time frame downtrend, and look for the 49 to 47k region. Okay, that is what we are watching out for. That does mean Bitcoin really does not have that much room to move down. If we go to our 3-day chart, we can see that leading span B is creeping up. We really don't have that much movement room downwards for Bitcoin until it does actually enter a high time frame downtrend, meaning we have to bounce very soon for Bitcoin. And if we look at the S&P 500, the S&P 500 again has to bounce very soon, or we're going to see not only traditional assets enter a high time frame downtrend, we're going to see Bitcoin do so as well. And guess what? The Federal Reserve, they're a little bit late, they're behind, they're delayed. If they don't bring those interest rates down, we're going to see that high time frame downtrend potentially develop into a bear market, something to be paying attention to. Of course, all hope is definitely not lost for Bitcoin. It is in a uptrend. It is in a bullish consolidation pattern. It is above our bearish trigger points, but we simply need to be aware of the consequences of if these levels are actually met and triggered. What impact could this actually have on the chart? We need to be aware. Remember, even if you're bullish, you should be always paying attention to the invalidations of your arguments. At what point do these arguments become redundant? And at what point do I need to flip biases based on my risk tolerance, based on my time horizon, based on my entry zones, etc., so then you don't get caught in a position that is unfavorable for your personal risk tolerance or your personal position. Remember, everyone's going to be slightly different. If you bought a 16.5k like I did, or you bought at 70k, maybe you might be taking a look at this correction slightly differently, but it is important that you have, whatever that may be, a set plan that you are following. You're not just blindly making decisions, because if you're blindly making decisions, you're influenced by emotion, and the market up and down swings very easily to change your portfolio value. And if you're emotional and you're attached to your money is going to control your decisions rather than what the data is saying, rather than what the chart is saying. If you're making decisions based on the changes of your portfolio value, you're always going to be chasing the money, and you're always going to be late and wrong. So pay attention to the charts, pay attention to the facts, be objective, remain calm. And if you find yourself stressed out and emotional, it's a pretty good indication that you have just got too much money in the market. You are overexposed. I say this all the time to my members, and I say this on YouTube a fair bit. If you're feeling emotions such as euphoria or fear, any of those two, euphoria and fear, they're two different emotions, right? But you're feeling either of those emotions, it is an indication that you are overexposed. Both of these emotions are warning signs. It's your body telling you that you have taken on too much risk. Whether or not it plays out in your favor or not will depend on whether you feel emotion, fear, or euphoria, but either of those emotions are massive red flags. And if you start to feel that, you really need to reassess your positions, rebalance your portfolio, and take a step back and look at it objectively. And it's very hard to do in the moment because emotions can be addictive, but you have to really make sure you are on top of it. Otherwise, you're just going to get trampled in the long term. Remember, with people like this, with emotional traders, no matter how many trades you give them, no matter how many good trades they take, it is not a matter of if, it's a matter of when. It is not a matter of if they're going to lose their money. It is literally a matter of when it's going to happen. It is an inevitability. If it hasn't happened now, it's going to happen at some point, because it's your decisions, your thought process, and your behavior that determines your success, not the trades you take. It is your decisions during those trades that determine your success, not the exact trade itself, okay? Winning and losing is inevitable. The decisions you make determine whether or not you come out on top. And if you have poor emotions, if you have poor control of your decision making, you'll have poor choices and decisions, and your losses are inevitable. So pay attention to that. Thanks for tuning in, guys. Remember, altcoins are pretty much wrecked if Bitcoin dominance goes any higher. We are at a resistance point here. S&P 500 at support. Bitcoin is an uptrend. I am optimistic. I am cautiously optimistic, but if we see those continuations lower, much lower, it is pretty much going to be short-term game over Bitcoin. Thanks for tuning in. Catch you guys on the next one, and cheers.